Let's stop writing first. Let's stop. We are in bank reconciliation statements. In the previous class, I explained why we have a bank reconciliation statement. We have a bank reconciliation statement because the bank has sent us a bank statement that is not the same as our bank account. We have the bank statement and the bank account. Whenever there is difference between the bank statement and the bank account, it is mandatory, it is important for us to do a bank reconciliation statement. Do you get the point I'm making here? There is difference between the bank statement and the bank account. The bank account is a business account, and the bank statement presented to the business is from the bank. So the bank account, the business has its own details about its spending and its revenue. So when the business checks that whatever it has in its own record, which is the bank account, is not the same as what the bank has sent to it, then it needs to reconcile. That is why we have bank reconciliation. Do you get me or not, please? There's bank reconciliation because there's difference between the bank account and the bank statement. Your bank account is your account, the account you have with the bank. The bank statement is the transactions you have done all through the month that the bank has put together to present to you. So if there's difference between what the bank has said you have done in terms of transaction and what you think you have done in terms of transaction, whenever you find out that there's difference between them, you have to do what? You have to reconcile the account. You have to check and balance the account. That is bank reconciliation. Do we get bank reconciliation now? You have your bank account, which is the details of all your transactions. The bank, your bank, you know what you have in your account. But the bank is telling you are having a separate figure from what you think you have. So in your mind or in your record, you have 5,000 euros. But in the bank says you have 3,500. So there's difference between your bank statements and your bank account. Are they the same?
No.
Are they the same here? No. So because there's difference between your bank statement and your bank account, you have to reconcile that account by checking the debit side of your bank statement with the credit side of your bank account, by checking the credit side of your bank account with the debit side of your bank statement. That is how you reconcile. So look at what I wrote here. Preparing a bank reconciliation statement. So how do we prepare a bank reconciliation statement? We prepare it through these steps. The first step is you compare the debit side of your bank account, the business account, with the credit side of your bank statement. If your bank statement is having a credit balance, it simply means you are owing the bank. Are you with me, please? So that's the first step. You compare the debit side of your bank account, of your bank account with the credit side of your bank statement. So whatever, as soon as you compare the debit side and the credit side, whatever that is missing, you figure it out. So when you are comparing, you have the debit side of your bank account, the credit side of your bank statement. So whatever is here must be present here. So if A is here, A is supposed to be here. If B is here, B is supposed to be here. If C is here, C is supposed to be here. So when you find out that there's A and A is here, you tick. There's B and B is here, you tick. If there is C but no C here, then it is missing. Whatever is missing on this side, you put it here on the credit side. Whatever is missing on the credit side of your bank statement, you put it on the debit side of your adjusted bank account. Get the point here. We have items A, B, C, D, E. These are the items. We have A, C, D. This is our debit side. This is our credit side. These are our bank statements. And these are our bank accounts. So the debit side of our bank statement must be equal to the credit side of our bank statement. The debit side of our bank account must be equal to the credit side of our bank statement. The debit side of our bank statement must be equal to the credit side of our bank account. Which simply means that whatever is in the debit side of our bank statement must also be on the credit side of the bank account. In the case that there are some missing items, that is why we have different bank statements and different figures for bank account. Do you guys get it or not?
Yes. what is the difference between bank account and bank statement?
The bank statement is what is presented to you by the bank. Your bank account is your own record. Please.
Can you repeat that?
Yeah, I will. The difference between the bank statement and the bank account is your bank account is the figures you have in your record. The bank statement is the figure that the bank has in its own record. You get it? So,
What's the bank statement?
a bank statement is the record of your transactions throughout the month from the bank. The bank has it. Oh, you gave me a check. You have in your mind that you gave me a check. But I'm going to take the check to your bank, yes or no, to withdraw the check. So the bank has the transactions I've done, that you have done, through the third party with it. But most of the time, there are different transactions that would have occurred that the bank, that you would not record, but the bank has the record. For example, charges, bank charges. Bank charges will come automatically from the bank. You might not be aware of it. So that will make the bank statement and the bank account not equal. Do you get it? There are some transactions that would have happened between you and other parties that, for example, you have given me a check to present to the bank, yes or no? But the check, I have not taken it to your bank. But in your mind, you have paid. So you have it on your record that you have paid me in the check, in your account, but I have not taken the check to the bank, which means the bank wouldn't have debited you for that amount. So it means you're going to have more than what you think you have, because there's an unpresented check. You gave me the check, in your mind, you've taken away the money from your account. But I have not presented the check to the bank. Because I have not presented the check to the bank would not debit you and credit me. So in your mind, you think you have, maybe you have 5,000 before, and you've given me a check of 2,000. So in your mind, you have 3,000 left, yes or no? But when the bank statement comes, you still have 5,000. You're like, why do I still have 5,000? You are having 5,000 because there's unpresented check. So that's why when you are adjusting your bank statement, you less unpresented check. Because unpresented check makes you to have more than what you have in your bank account. Uncredited check makes you to have less than what you have in your bank account. Do we get it? You don't understand. There are two situations here. We have unpresented check. We have uncredited check. An unpresented check is a check that you have paid, but the client have not taken it to the bank. So in your mind, you have given me a check, which is supposed to be a debit for you. But there's no debit for you because I have not taken the check to the bank. You only give me the check. I still keep the check in my house. Maybe I don't have time. So the transaction between you and I is done, but the transaction between you and the bank is not done. So the bank does not have the record. You only have the record. And that will make your bank statement and your bank account not equal. Are we together now?
Yeah.
Great. So, the first thing is, the step one is the debit side of the bank account with the credit side of the bank statement. So you think it, oh, A, B, oh, there's no B. C, there's C. D, there's D. So we need to find
B and E.
We need to find B
And E.
and E. So B and E on the debit side here will be on the credit side of our adjusted account. But the first thing is to figure out that the debit side of our bank statement is equal to the credit side of our bank account. The debit side of our bank account is equal to the credit side of our bank statement. That is the first step and second step. Do we understand?
Yes.
Are we sure? The second step is the same as this. Now the third step is to adjust the bank account. This is done by placing unticked items in the bank statement into the adjusted bank account. Now there's no C, there's no B, right? There's no B and there's no E. We now have to adjust it in the bank account. Step one is to find the differences between the bank statement and the bank account, the debit and the credit. Step 2 is to find the difference between the bank account and the bank statement, the debit and the credit. Step 3 is to pick out the missing items and put them in the adjusted bank account. Do you get it? So in your adjusted bank account, what do you have in the debit side of your adjusted bank account? What do you have in the credit side of your adjusted bank account? That is where you have to understand, please. Balance as per bank account. The debit. The debit side here is talking about the amount of money you have in your bank account, which will be a credit here. A credit in your bank statement, means you have money. So the credit will be here. So what you have in your bank account is a credit. What you have in your bank statement, your debit, your bank statement now, you're going to have, if you have a negative figure in your bank statement, that is a debt. You are owing the bank. So if you are owing the bank, it becomes what you have to pay back to the bank. You know, sometimes you can withdraw more than what you have in your bank account. When you withdraw more than what you have in your bank account, you have to pay back the bank. You are owing the bank. Your account is on debit. Do you get it here?
Yes.
So here, the bank balance here is what you have in your bank account, your credit. The credit in your bank account means you have money in your bank account. So if you have money in your bank account, it will be debited in your adjusted bank account. If your bank account is positive, it means you have money with the bank. So it will be here. If your bank account is negative, that means your bank statement is saying debit. It means you are owing the bank overdraft. If your balance as per bank statement is saying a credit, it means you have money in the bank. If your bank statement is stating that there is a debit, it means you are owing the bank credit in the bank account. Do we get it, or I explain it again?
Yes, very good.
Your bank statement is the total transaction you have done. If your bank statement is saying you have a debit, it means you are owing the bank. In your adjusted bank account, it will be on the credit, overdraft. Overdraft means you are owing more than what you took, more than what you have in your bank account. If your bank statement is stating that it's a credit, it means you have money in the bank. Debit here. Do we get it now or not? If your bank account is stating that there is a debit, it means you are owing the bank. When you are adjusting the bank, on the credit side. If your bank account is stating that you have a credit, it means you have money in your bank account. When money is sent to your account, you have a credit alert. When money is taken from your account, you have a debit alert. So that will come from that will be what will be in your bank statement. So your bank statement is talking about a credit. It means you have money in the bank. In your adjusted cash book, in your adjusted bank account, it will be debited. Credit here is debit here. If your bank statement is stating that you have a debt, it means you are owing the bank an overdraft. In your adjusted bank account, it will be what? Credit. The debit in your bank statement is a credit in your bank account. The credit in your bank account is a debit in your bank. The debit in your bank statement is a debit. The credit in your bank statement is a debit in your bank account. There are two things here: bank account, bank statement. The debit side of your bank statements must be equal to the credit. The debit side of your bank statements must be equal to the credit side of your bank account. The credit side of your bank account must be equal to the debit side of your bank statement. So, if you have money in your bank account, your bank statement will be credit. If you are owing the bank money, your bank statement will be debit. So you have to adjust that. By adjusting it, the debit in your bank statement is a credit here. It's a credit here, sorry. And the credit in your bank statement is a debit here. Do we get it now? Are we sure we get it? Debit, credit. You have to understand this. We have bank account and bank statements. You better focus here, please. There's debit and credit for bank account, and there's debit and credit for bank statements. Your bank account debit must equal to the bank statement credit. Your bank account credit must equal to your bank statement debit. Your bank account debit must be equal to your bank statement credit. Your bank statement debit must be equal to your bank account credit. Do we get it? Do we get it now or not?
Yes.
Good. So, if your bank statement is saying a credit balance, if you have a credit balance in your bank statement, it means you have money in the bank. It will be on the debit side here. If your bank statement is stating that there's a debit, it means you are owing the bank. You have it on the credit side of your adjusted bank account. Here it is balance as per bank account. This is the money you have. Here is the balance as per bank account, the one you are owing the bank. Is it clear? The second, yes?
Can it be like the opposite? Like bank statement is debit and bank account is credit?
Credit.
And I can
Yes.
Okay.
Do we get it?
Yes.
So, that's the first. Then the second one, place any unticked item from the credit side to this side. So, unticked item on the credit side will be on the debit side. Unticked items on the debit side, on the credit side will be on the debit side. Now, the adjusted bank account. Those items that we did not tick on the debit side will be on the credit side of the adjusted bank account. Those items on the credit side that we did not tick will be on the debit side. This is our bank statements. This is our bank account. We have B and C on the debit side here. It will be on the credit side. Do we get it now? Those items you did not tick on the debit side of your bank statement will be on the credit side of your bank account. Those items you did not tick on the credit side of your bank statement will be on the debit side of your bank account. Adjusted. As soon as we adjust them, the next stage is to prepare the bank reconciliation statement. Do we get it? So how do we prepare the bank reconciliation statement? The balance as per bank statement, either this or this will be here. Did you get that? Now we want to prepare the bank reconciliation statement. To prepare the bank reconciliation statement, all items we have to place them here. The first one is the balance as per bank statement, either positive or negative. If it is this, you place it here. If it is this, you place it here. The next stage, you add lodgement not yet credit by the bank. By the bank. Here, there is a check that a customer has paid me, but I have not taken it to the bank. Do you get it? We call it uncredited. Uncredited check. Uncredited check. Uncredited check is a check that has not been recorded by the bank. So you have to add it now. Add any debit entry made in error if the bank has debited you wrongly. That reduces your money. The bank has to pay you. Please focus here. When you have to prepare your bank reconciliation statement, the first item is your balance as per bank statement, either the debit or the credit. The second step is you add uncredited check. Lodgements not yet credited by the bank. There are some checks that your clients have paid that the bank has not credited. You add it. Any debit entry, any debit that the bank has done wrongly, the bank has to withdraw it and you have it. You get this. You add it to your bank balance because these two are part of what you should have. You add it to your bank statement, your balance as per bank. Now, you less. Check paid but not yet presented. Unpresented check. Unpresented check. A check that you have given to a customer or your supplier, a check you have given to your supplier that he has not taken to the bank. That increases your money, but now you have to take it away from your money. Less check paid but not yet presented. Unpresented check. The next deduction is any credit that the bank has done for you that is increasing your money has to be withdrawn. Any credit entries made in error, maybe the bank has mistakenly paid you more, the bank will take it away. What the bank has not done for you, the bank will have it. What the bank has made mistake to do, the bank will have it. What the bank has mistakenly done for you, the bank will take it. Do we get it?
Yes.
So this will be our balance as per adjusted bank account. These are our adjustments, and as soon as we are done with this, we prepare the bank reconciliation statement. The final figure we have here is our balance as per bank adjusted account. Do we understand how to prepare a bank reconciliation statement now?
Yes.
Please write.